Everybody, happy Thursday, you magnificent monsters. Grab your caffeine of choice, me. I've got this monster right here. It's an ultra sunrise because it feels like the sun is about to rise on a whole lot of burned up bears out there in the market. Now, for the past month, it's been nothing but fear. The headlines have been screaming about war in the Middle East. Oil's been going crazy, making moves bigger than we've seen in a long time. Tech stocks have been getting kind of beat down a little bit, fleshed out. It's been a long, slow grind for a few months on that one, and the S&P kind of erased all its gains for the year. Bummer. Everybody out there, everybody is piling into the bear camp. We see the puts stacked all the way down right now. It's gotten crowded. So crowded that we're kind of running out of room. You can't hardly scroll through any financial X post or social media without tripping over more than a dozen doomsayers calling for a bigger crash. And the charts do support more downside, but we don't ever go down when everybody's expecting it to. And that, my friends, is the smell of a trap. And when every single person you know is screaming the sky is falling, when everybody's beating the drum, when mainstream media is even saying, watch out below, you better start looking for a ladder. The consensus is almost always wrong. Everybody tips the boat to one side, we go the other way. The market zigs when you zag. The fact that the bear camp has become the most popular trade on Wall Street right now is the single biggest buy signal we've seen all year. Being on the wrong side of this, staying bearish or short while the tides are turning, could be the most expensive mistake you might make in 2026. The coming bounce, probably not going to be some sort of gentle recovery. It's probably going to be a violent, face-ripping, rip your face off type of rally that leaves the unprepared wondering what the F just happened. What the fudge muffins? Anyway, we're talking about technical structural setup for a major squeeze. Today, we're going to walk through the why the consensus might be wrong, where the opportunities might be hiding, and how to possibly position yourself, maybe your portfolio, to ride the wave while everybody else is licking their wounds. So, diving in here, the canary in the coal mine, the guy who just flipped the script or tossed the table. It's a trader named Scott Rubner. Now, maybe you've heard of him, probably you haven't. But on Wall Street, he's a legend. He's the flow guy at Citadel. This is one of the biggest, baddest market makers on the planet. His entire job is to track where the money is flowing. 2 weeks ago, he was absolutely bearish, pointing out all the fragility. He was right. We got a dip. The market dropped. This week, he sent out a note to clients saying, and I quote, "The bear camp has become too popular." So he's closing out and taking off his tactical bearish call and turning bullish, at least for the short term. When the guy who sees the order flows for a huge chunk of the entire market says that the bears are too crowded, well, this is time to listen. This isn't about feelings or fundamentals. This is about the mechanics of the market. It's about positioning. And right now, the position is one-sided. And it's about to snap back like a rubber band. I've been noting this on the levels for the QQQ. When I look at the gamma levels and we kind of look at it, I was like, the call side is really bare. And Rubner laid out 10 reasons for the bounce. And I'm not going to go through all 10. But let's hit the big ones. And it's all about our favorite framework here. The one I talk about all the time on the Morning Monster. What's the crowded trade? Right? Where's the crowded trade? First, March options expiration. This is the biggest technical event of the month. It's the quad witching. It's the end of the quarter. It's end of the half. End of the half. It's end of the quarter. It's end of the month. It's coming up on March 20th. For weeks, the market has been pinned by a giant wall of call options. Looking at the S&P 500 going to 7,000. Market makers who sold those calls have to hedge by selling stocks, at least when we're in the positive gamma regime. And every time the market rallies, which has been, kind of lackluster so far, we see that selling happen. And it's been capping off any move higher. But once those options expire, the cap is gone. The market could be free to run. Now, that's coming up. That's down the road. That's 15 days away. 2 weeks and a day. Friday after, not next Friday, Friday after that, 20th. Now, number 2, retail has been buying. You guys, the magnificent monsters of the market, have been buying every single dip. Citadel's data shows that January was actually the biggest retail buying month ever in the whole history of forever. And February, the dip buying got even more intense. Now, while institutions were hedging and panicking, us retailers, we were out there loading up. That's kind of a massive base of support. And third, this might be my favorite out of the list. Tech has been hated. It's been hating on. I mean, we've seen Meta down at support. We've seen Microsoft down at support. We've seen Apple down at support. We've seen Google pulling down close to support. We've seen Tesla at support. I mean, even Nvidia sitting there. I mean, that's basically all of the Mag 7s. You believe it? The sector that's been carrying the market higher for years, or according to Rubner, is now low, hedged out, shorted, and absolutely unloved. Big tech names, Nvidia, after its insane run, for like 7 months, it's just kind of been blasé, just doing nothing. We're seeing people rushing to take profits and even short it in some cases. The rotation has been pretty brutal if you were long big tech, but tech, the whole point, the whole thing right there, changed my thought of just a little bit. Big tech makes up over 30% of the S&P 500. For years, Apple was the biggest company in the land. Apple and Microsoft kind of swapped back and forth. Now, Nvidia kind of holds that crown and has for like a year or more. So goes the S&P, so goes Apple, but now so goes Nvidia, and really the Mag 7s in general. So the index can't really move big without big tech when it makes up 30%. When that sentiment flips, and it's probably going to, you're going to see a FOMO rally back into high quality tech so fast, it might make your head spin faster than Beetlejuice, Anyway, Wedbush is already telling clients to own names, to pick up names like Apple, Microsoft, as they're dipped out in this chaos. And then finally, we have volatility at a breaking point. The VIX, Wall Street's fear gauge, it spiked over 28. That's pretty extreme. When the fear gets that high, it doesn't stay there long. It's a contrarian buy signal. More importantly, a lot of systematic trading systems think that CTAs, computerized trading algorithms, those risk parity funds, they're going to be forced to sell when volatility pops. But when that volatility starts to come back down, and it will, it doesn't usually stay elevated more than a few days, those same funds turn right back into buyers. It's a self-fulfilling prophecy. A drop in the VIX will trigger a wave of systematic buying. And don't forget that every month, like clockwork, we have millions of Americans, hardworking folks like you and me, dumping money right into their 401ks, their IRAs, and doing buying. So those big funds that get all that money have to do the buying too. And then as we get through the beginning of earnings season next month, we've got stock buybacks. We're getting right down to it. Here in the next couple of weeks, we'll be entering the stock buyback blackout window. It'll kind of slow down, and then it'll accelerate again once we get into the new quarter of earnings. So what's the play? How do you make money on this? This is a multi-layered trade. You have the direct winners, the volatility plays, the contrarian moves, the bounce kings. You can play the broader market bounce with ETFs like SPY or QQQ. SPY for S&P, QQQ for NASDAQ. And if you want to bet on the tech rebound, quality names that got beaten down as this rotation or whatever you want to call it has taken place, you can think of NVIDIA, Microsoft, Apple. I mean, these companies are going to lead the charge when the FOMO really kicks in. We're going to push to all-time highs likely. And then you have the volatility crush. If you believe the VIX is going to fall, well, there's a great play out there. An inverse VIX ETF like SVXY. It's a great way to play when get some money when volatility crushes. I mean, it's a direct bet on volatility compressing, which is the core of Rubner's thesis here in the report. It's a risky play. I mean, it could play out. It could be huge if the markets calm down a little bit. You've got the unwind trade. And what happens if geopolitical situation de-escalates all of a sudden? I mean, we could see there was a tweet posted in Discord, or tweet or post or X or whatever you want to call it, in Discord earlier this week. What if Iran just took $500 billion and bought 7,000 strike calls on S&P? 700 calls on SPY, 7,000 calls on S&P 500, SPX or ES, and then called up Trump and said, let's make a deal. We agree to everything. Everything's cool. We could see a market rip your face off rally so fast, and they could make like $4 or $5 trillion off of a play like that. It'd be absolutely insane, right? Could de-escalate. If they're smart, they know how to make money out of it. And all that money, it flows right back out into the market again. That means demand for maybe gold, maybe oil. We might see that demand drop. And the money has to go somewhere. And as the de-escalation happened, it's likely to flow right back into equities. This isn't a time to be a hero and try to call the absolute bottom. It's a time to recognize that sentiment got a little too negative, a little too fast, and the positioning is a little too one-sided. After all, wars are actually bullish, whether you want to believe it or not. The mechanics are in place for a sharp reversal. The bear camp, probably a trap. It's ready to spring, ready to grab people. So as you sip your coffee or your monster like me this morning, ask yourself, are you in the crowded boat with everybody else that might tip over and dump everybody in the lake? Or are you on the side of the trade that might explosively make money? Easy trades, they're done. This whole move, the pullback is done. The profitable trade, just the beginning, so stay caffeinated. We'll dig in some charts, see if we can find some ways to make money today in the shorter term. What do you say? What do you say, everybody? How's it going? Thank you all for being channel members. I do appreciate it. I guess before we talk too many charts and trades, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade those things naively, you're probably going to lose money. There's a new office open up below me that you can go get some personal financial advice if you want to. He's certified. Me, I'm just a dude on YouTube with a bag of unicorn dust and happen to get lucky a lot in the market. Anyway, look at the ES. Get a little three-wave retrace overnight. And if we can hold that, hold the 30 minutes, push through the 1 hour, get above the 4 hour where we found that resistance yesterday. I mentioned that we probably would. Right there, as we wrapped up the show, I mentioned that the 4 hour resistance was probably the resistance yesterday. Still is the resistance at this point. With that move up right there, off that low to that high, we might actually come back down to a 618 zone right in here before we can bounce and go higher. And before anything crashes out, I'm going to click save and refresh this page because my mouse was lagging a little bit. Might have to close the whole dang shebang here. Let's see. Let's close out. Yeah, my memory is sitting at 90%. Yeah. Let's close something else out. There we go. Back down to 50%. All right. This might load back up sometime. There we go. There we go. Now we're cooking with diesel fuel. So, yeah, now nice and speedy. Looking for that retrace, then potentially busting up through that roadmap line. So, key prices in play right now, 6880, 6900. This is the S&P 500 futures. Maybe like JT, why are you looking at futures and not just the cash index? Well, got a little bit different situation going on here. You see the 4-hour on the cash index is actually right where we've been bouncing. And the daily was right down just underneath here for the cash index. See that right there? Just underneath us. Now, cash could be saying, you know, I need one more dip. But that could lead to that rip your face off rally I just talked about. Suck in some more bears. You know, did we sufficiently suck in enough bears or not? I don't know. It's not for me to say. It's for the market to tell us. Now, I did just close out the bullflow.io page when I killed the other browser. Let me restore the session on that. Hopefully it won't kill everything. And pull that back up. I just got to pull that over and let's see what we got cooking. No longer valid content. Cool. That's no longer valid content. Cool. And there we go. Gex heat map. See, we don't need Qs. We need the spine. Oop, almost knocked over a monster. There we go. So we do have some options players in here. And that $1 billion level down at 680. Right there. You'll be like, well, that's not $1 billion. It's 909 million. All right. Splitting hairs. There's over $1 billion of puts there. That's a pretty big level. Now, it doesn't mean we have to go down there. We've been down there. So just be careful. Be careful, everybody. Let's go check out the SPY real quick before we dive too much into it. Now I'll circle back toward the end of the show, go through the GEX maps, try to pick out where I think we're going to hang out for the day. Look at that SPY yesterday. Got a pretty darn bang on. We kind of stayed in between the two big levels. So today, we've got that big 680 down here. And we'll circle back toward the end of the show and kind of pick where I think we might pin for the day. Tomorrow's really the big day. And so I just pulled this over. This is not set at all. Now, why don't I do it at the beginning of the show, like right now, when, you know, you could just take off? Well, the problem is we have amateur hour. Amateur hour has a lot of options flying around. And it doesn't really start settling down until closer to 10:30, which makes it difficult to try to pick the range and pick everything when there's tons of options flying. So right now we don't even have, you know, when you look at this right here, we don't even have a bubble formed at all. We got two little levels up here. We got a level down here, and it's kind of devoid in the middle. I guess three levels up here. One down here, this bigger one out here, one there, one there, one there. Look at that 500 million up there, balancing out that $1 billion level down here. But what, you know, where the put players are, look at this. You got big level, big level, big level, big level, big level, and they're stacked all the way down in here. There's big levels all the way down. That's too many put players. That's what you got to be careful for. And then all the way out to the monthly expiration. You know, QQQ's big level is out here on the monthly, but you've got big levels stacked all the way down. Big level, big level, big level, big level. I mean, they're stacked every 10 points all the way down to 640, which would be 6,400. on SPX. It's a little bit bearish right there. A little bit bearish. So, circling back over to SPY. 640. Let's just look how far down that would be. Holy guacamole. People are playing this as if we're going to get an epic flush all the way down here. Just doesn't look likely. I mean, that would be way down here. Significantly below the daily support. Let's see where the 3-day support even comes in. It kind of be in no man's land. It doesn't really even make sense because the daily is right up here and then the 3 days down here. So if we were to break through and go cruising down, 640 is probably not where we're playing to. And then the weekly where we hit during the Liberation Day flush all the way down here at 56. Holy guacamole. We're talking about 120 points down on the SPY. That'd be 1,200 points on SPX. That would be a big flush. See? Not so sure we're going to do that. Not yet. Look how we did it over here. Price moved down, kind of faked people out, right back to new high, and then flush on down. That's how we played it out on the weekly. On the daily, they gave us some warnings. And right here, late February is when I got really concerned. I was like, uh-oh, we're probably going to do that. You can go back and watch the show from February 28th. I actually drew that right on the chart. Drew the weekly support right on the chart that we were likely to go hit. And that's exactly what we did right here. Touched it and went ripping off. Now, right now, we're kind of arcing down a little bit, but more likely we'll do another bounce before we actually rip everybody. So, bear trap, get everybody hyped up, and then do a bigger pullback if we're going to do it. That's probably what we'll do. That's what the market likes to do at the top. Anyway, downtrend highs, that's something to watch out for. INDX, NASDAQ, a little bit different path because the high is not, we don't just have this downtrend highs. This was the actual high back here all the way back in October. And we've been lower high in it across here ever since. Just a slight downtrend. This was the first violent move down. We haven't really, even though we've had tech rotation and stuff, we haven't really been down there. We just finally hit the roadmap line right there. And we could see one more little dip and then a big rip. So be careful being overly bearish. That would be the warning right here. That would be the warning. Let's look at the NASDAQ futures. Same kind of deal. We're finding resistance at that 4-hour. We poked through. And we're starting to soften it up right here. We poked through. Back at it. Just a couple days later. If we stick the upside, we're probably going on higher. We could even make a higher high at this point. This correction has been going on since October. Be careful. That's a lot of pent up churn in the market. And it can take us higher in a hurry. Russell on a different kind of path. Now we do have that 4-hour resistance here, but this is a whole different looking chart. This has not been churning since back in October, like our trusty S&P 500 and NASDAQ. They've been churning since back here in October. Russell, on the other hand, has been pretty darn bullish coming into this year. It has pulled back a little bit retesting these levels where we broke out from. Right in here. And if we get on the upside of this downtrend of highs right here, probably going on up to 3,100. And if you wanted to take advantage of that with something, IWM would be the ETF. Now I just got alert here. See what we got cooking. Why did I put that alert on the chart? Back to a lower low. I don't even remember why I put that. Let's see. I'm a log me out of Tasty Trade. Put that back in. I don't even like. I should always put notes on my alerts when they're random stuff. Oh, I think you know what? I played a 1450 call. I saw, I was playing with the different thing. I remember what I did. Remembered why I did it. So this right here, bullflow.io, there's these big volume spikes. And the March 6th 14 call for Sentinel-1 S had like a ridiculously big level show up. Ridiculously big. It's like 30,000% bigger. Now, looking like it's not going to play out too well. And yeah, it's probably going to, since earnings is out here next week, probably not going to work out too well. But it did get darn close on that move up. Guess I got to close it out by tomorrow. I put 10 cents on it, so $10. Bought one. So it's not like a big risk. I was just playing, see if I was right. Apparently, not going to be, maybe. We'll see. Put a 14, put a 15. If we get up to, if it were to suddenly pop to 15, that would, at 10 bucks would turn into 50 bucks, and that would be a pretty darn nice 5xer right there. Only got one day to go. May lose all that 10 bucks. All right, moving on. Back to Russell. IWM was the way to play. And probably going to, if we hold here, cruise on higher. Now, if you wanted to get some leverage without buying options, UWM would be a way to do it. If we go to 31 on Russell, RTY, that's the futures for the index, probably going to push us up around 69 on UWM. Oil, like we've been talking about, chopping around here, it's finding some resistance at these prior highs. Finding some resistance. We've rejected there, not just twice. We've rejected there 1, 2, 3, 4, 5 times. This is number 6. And this goes all the way back to the yen carry trade meltdown right over here. Are we going to push through this time? Is this time any different than the 5 times before? Or do we see de-escalation and this pushes back down, gets down in the low 50s, maybe the 40s, and then we have another escalation in the Middle East? It's possible. GC, be careful here. I think we're going to flush down. First move down, retrace. Second move down, probably going to bring us down into this zone somewhere between 3,800 and 4,400. It's a big fat zone. You know, lower low is all we have to do to finish this correction up. Retest that breakout, same kind of level. You'd be like, well, I think that move down was finished. All right, I don't. I think we're going to get another big flush. The why, I don't know. Maybe we sucked enough people back into gold on this rally back up above resistance, and we get some more pullback. But silver, a little more lackluster here. Didn't break through that 618 level. And first move down, retrace. Second move down, put us down here in the 50s. Low 50s, if not high 40s. So watch out. This would be the buying opportunity because this likely can kick off another leg higher. It's probably not going to be overnight, though. This exponential move probably a little bit played out. Taking that back a bit and then return to the climb rate. Right there. So it could take well into later this year before we're back up to new highs. I think long term, gold and silver probably not done, but short term, probably going to get a bigger pullback. Bitcoin, be careful. We're coming up into the zone where I would expect this move up to be played out. 75, 70, 75, possibly as high as 79. Could be played out now. We did make the higher high than that move right there. That is an ABC type move. If you're new here, ABC, absolutely beautiful correction. The only requirement on a C is to be higher than the A. This looks like 1, 2. We'll probably get 3. Chop in here for a 4, and we'll probably get a final little pop for the C top. Doesn't have to happen, but that's likely to happen. Then we get a 3-wave retrace back down into the 68 zone, maybe 65, maybe 70, and 66, I guess, is the ideal spot down there. If we, if that was the high right in there at 77, this is the low right back here. 66 would kind of be the ideal retrace spot. Then we can rally back up to a little bit higher high. Maybe in the 90s, coming into late May, maybe June. Probably top that out here and probably go down into the $30,000 to $50,000 area out into October and bottom out in Bitcoin. Maybe like, well, that sounds pretty bearish and bum people out. That's the whole point. We sufficiently bum everybody out every 4 years, and then we go back on the hype train. When everybody's kind of bummed out and bearish, time to rip again. So if you're trying to be a big buyer of Bitcoin, probably wait till later this year. Now, if you have FOMO missing out, wait for this dip here, add some in and ride it up. Make sure to protect your profits because that's the likely path unless something technically changes in this chart. Right now, it's the operative path. Has nothing to do with any kind of narrative, everything to do with price action. Same kind of path for Ethereum. Probably going to make that lower low sometime out here in October. Dollar rallying back up through the roadmap line. Back tested. So here's the real test. Do we hold on to this right here? If we do, in fact, hold on to it, probably going to see the dollar shooting higher. If we get to that 102 level, probably going to start stopping people out that are short the dollar. That was the big trade last year for big hedge funds. And if we start doing that, probably going to put the down pressure on gold, oil, silver, platinum, traditional commodity type stuff. This is the safe haven while there's global chaos. And we saw that very quickly. NKD, probably going to see this get flushed on down. Right in here. I was talking about the Kospi yesterday. Look at that big candle. And we're back up just a little bit today. First move down, second move, third move. Probably coming back down. 4,400 EWI. If you wanted to play this on the bounce, buy some puts. Probably get some cheap puts for down here around 100, or even play a debit spread in here. In fact, let's take a look. Let's take a look. It may have too much chaos. I don't know. Let's see what we got. Let's fly out a few months, maybe to June. Oh yeah, it's pretty rich. So if you want to play this, return back down. Probably buy something like a 15. Sell like 100. 15 wide, cost you $4. Could be a 3x. It's a little rich. I like to risk, you know, stuff like this. I like to risk like $1. That's $5. And it's running a little rich. $1.65 to make 5. $3 to make 10. $4 to make 15. I'd probably want to be out to June at least. Yeah, another thing you could do is put a credit spread down underneath it. Reduce the cost even more. Dip down in there. Now, the problem here is, though, it dips down in here. This is probably going to get elevated. Now, if you were super bearish, you could come up here. There you go. That gets it down to 75 cents. So that's a call credit spread, bearish. And you put call credit spread, bearish. Put debit spread, bearish. You have to be really, really right, but risk 75 and potentially make like 15. Interesting. I might consider doing one. I mean, 75 cents to 15. That's a pretty big reward. Probably wouldn't get all of 15. Maybe just close out for 10. You got 13x. You got all the way to 15. Well, it'd be 15 minus. It'd be 1475, I guess. No, 1425. Excuse me. 1425 would be your. You could get $10 profit. Oh man, down to 50 now. Divided by, so 14. Back that off. 1450. Potential upside divided by 1450 divided by. Cool. Maybe a 29xer. That played out in full. If you got max profit, like if it dipped all the way through 100, stayed there by June, unlikely. But man, that's actually that's attractive right there. I might put that on. Let's see what account I'm in. I ain't got enough money in this account. Let's see. So here you go. The $1,000 wide is going to reduce my buying power by 1,000. Cost me $50. And the potential downside right there. See if I can get filled for 50. I'm gonna put it on. There we go. I don't usually do trades, but that one looks pretty spicy. Maybe add a couple alerts here. Like I said, I should always put notes on my alerts. That's what I'm doing. Now this could get, now I'm not filled yet. This could get a little spicy and then come on down. And it's all based on the Kospi. Oh yeah, that would be. Now this may see just a little higher pushed here for a third move. One. New trend down. 3-wave correction. Absolutely beautiful correction. Up to a 618. And then return to the roadmap line. May not go all the way to the 100. And yeah, like that move, that move. Yeah, see, that did hit a point where we can go further down. But this little retrace here, probably set to push up to 14 and then flush on down. I like this move. Let's look down a little bit. Timeline wise. Oh, it's possible that that was it. Like 1, 2, 3. See this move right here? It's a lower time frame. See this right here? This 1, 2, 3. That was possibly it. We could cruise on down. But that could just be the 3-wave A, 3-wave B, and then we get a 5-wave C right up here. And then we go down. That's where people really get messed up. It's like getting too bearish here on the potential that this was it. And this is probably more like the it right over here. Kospi Composite Index. So this is South Korea, in case it wasn't clear. If you want to know more about what I was talking about, I've been watching this for a while. EWY. On the daily charts, we tagged that 1618. And we didn't really stop at 1272, the 1448. We just broke out back here at 96 and went on a parabolic rip right up to 150. Technical wise, probably played out a little bit and need a cool off, a chill out. So look at to play this dip in here. Now, the risk, I could lose $1,000 if this goes tearing off to new highs. But my 50 cents could turn into a ridiculous. Now think about it, $50 could turn into $1,300. Of course, you may be like, well, you're using $1,000 though, so really the return on capital is not as big, but return on risk, it's okay. I like the 50-cent cost. Now, if this drops on down, I'll probably close out the call spread, ride the put spread. So hopefully that makes sense to people. It's the way you make big return on relatively small investment. And there we go. So I go pull gainers, things moving up $2 or more. And I go pull decliners, things moving down $2 or more. The list wasn't very big today. You got booking dot, yeah, coming up to the roadmap line pretty quickly. Wow, look at that thing hauling butt. Nice potential. ESLT potentially played out to the upside. Burlington stores. It's chopping around in here. I don't think I've ever been in a Burlington store. AVGO. Potentially going to need a dip down to 284. Vive, possibly done on the downside. CRDO, potentially down on the downside. Need some bounce action here. EXPE. Ooh, wow, look at that. Expedia. Probably come up to 316 if we can get through that 269. Now watch out for that to find resistance here and turn down. But if we get through there, get through that mush upside right up in here. ALEB, maybe done. TTD, maybe done. That's a nice pop. We need to get through the roadmap line to indicate we're done, though. That was down to the support zone. We could go a little lower. That could be done, though. Now, that A, B, C, absolutely beautiful correction, perfect proportions. If we break through the roadmap line, the 618 would be the next upside resistance. Resistance. Right up here around 68. I guess I skipped the Mag 7s, didn't I? Apple. Probably going down for a tertiary roadmap line bounce. Amazon. That's probably the bottom. Hopefully everybody held on. Both hands. This is probably going to rip back up at least to the prior high. If not, get the extensions. And it could be set up for bigger move up to like 320 maybe. Yeah, more conservatively, it would be like 270, 280, then 300 maybe. We may see it, you know, that roadmap line on the daily and this 618 where we gap down from. Those are important resistance levels. And don't get me wrong, if we can get through it though, that would be the most likely target at 270, 279. Back test, push on up to 300 right there. Google probably still needs to dip right back down in here. Meta still set to break out. When this thing finally breaks out above 750, it's on like Donkey Kong. 1100, 1300, could take a year or so to get there. Maybe two. Meta looks pretty good. But Microsoft, I don't know. Microsoft churning in here. Is this the bottom? Or is this just another consolidation like we did over here before we make a lower low? Lower than that low back there last year. We got deep, real deep right here. But we held the line, barely. We rally back up, get through the roadmap line. We'll probably, well, first attempt we'll probably retrace. And that would be, if we hold that higher low on a retrace, that would be the indication to go long. You could play it from here up to here. Get back out, wait for it. It's possible. NVIDIA, but I can't guarantee we're going up to the roadmap line. We may just dump out. NVIDIA would look best if we would take one little dip right down here. But we've been holding this roadmap line really well for November, December, January, February. We're in March now. 5 months. And that can lead to a pop up to 220. Tesla. We're down in the sauce here. We're at the coin flip point. We're under the roadmap line. This, to me, I would give slight edge to dipping out to 370. And probably like 55% maybe. And 45% ripping higher. Now if we get above that right there, it flips the whole thing to like 75% going higher. And 25% crushing out. So that's what we got to watch. Right now, slight edge to cruising down to 370. I'm not changing anything I got, but the odds can change drastically if we get a nice little rally going. And this is probably going to go on up here to 520, if not on up to 550 or even 600. I see a whole lot of talk about SpaceX going public in June. I don't know. Be careful. It may happen, may not happen. Netflix into the roadmap line. May get a retrace before we push through. That 107, 108 resistance right there. If we get on the upside of that, we do have a gap down over here on the way through, but it sets us up for this 145 target up here. That's kind of the Mag 7s. Look at some other stuff here. Light probably going to come back to the roadmap line. KRU probably going to get crushed when Korea pulls back. ASML probably going to pull on back. Needs to pull back. Needs to pull back again. Toyota Motors needs to come on down to the roadmap line. Look at that beautiful A, B, C. Now it could find support right in here. This is proportionally in the money right there for bouncing. Could extend on down to the roadmap line, but it might just be like a 4-hour bounce. That'd be the high. This be the low. 618 going higher. Right there's the 618. Then the higher will be 253, 257. I don't remember who was getting bullish on Corning yesterday. That thing getting whacked this morning. Wonder how that worked out for him. BJ's Holdings is indecisive. NVS probably come back down. BABA probably come back down. Oh, we're in the, look at that, in the target. So BABA could be complete. Could be. May dip a little bit lower to 125. 203 if we can get the mustard together to pop through the roadmap line, get through the 618, get through the prior high. Resistance is stacked against us, but that would be the target, 203. And it's not like this thing doesn't just go on rips occasionally. So I may chill out for a month or two and then rip right up to the target. Maybe even get an extension, possibly up near 250. AXP, nothing. AMD, this is ripe right here. If you don't have any AMD yet, better consider it. This thing is ripe for a rip. 3-wave correction, beautiful proportions. I got nothing to say this thing won't start on its mission to pop on up to 5 to 600, 4 to 600. EWY did that trade for the downside. Be careful. I might lose my money. Iron probably going to take another step down. Shopify making a valiant attempt to get through the roadmap line. Then the 618 just above that at 150. Target 196. Let's look at some setups here. Dino Sinclair. It's kind of crazy this thing's still around, you know, like 61 on the upside there. Watch out for the retrace. It did kick off right there, but it's a very small reward for a potentially larger risk. Stop is $1 below the low, around 46. So the upside is relatively small there. Might work, might not. Statistics not very supportive either way. Not statistically significant. Now, I entered back here, has not hit the target at 30.75. We're triggering a looks like secondary bounce with a slightly smaller target at 30. It's not far away there. Doesn't have any statistical significance, so be careful. And then the third one on the list, PRTA. Out of like 4,000 tickers, only 3 were set up for an entry today, potentially. and none of the three look great. 1085 low price stuff. Stop is $7, $7.27, below the low. Yeah, just not feeling it on any of those three. So looking at SPY, let's read the tea leaves of the gamma. See what we can come up with today. See if we can figure it out here. Where, oh, where might we go from here? So pulling up the gamma heat map for S&P. Still no bubble. So bubble for tomorrow down here. We might find. All right, so big level at 690. And we got big levels down to 77. A little bit of an expanded day today, it looks like. Check out those levels. See, the put's much more dense than the calls. That's too many put players there. Too many put players. Sucked in a few call players yesterday, but you know, see, we have 3 days of stack calls, but then the puts out here to the month, much bigger. Got a nice stack of puts for this Friday. So unlikely we crash by Friday. Could pull down to that 680, but balancing this out, like 683 would be where I kind of expect us to hang out for the next couple days. Oop, moving the wrong thing. Moving the wrong thing. $683, and then we've got that big low at 680, so I'm just gonna leave this right down there at 680. We may come visit that. This is where I kind of would expect us to come back up to if we do go that way. Just hang out right there. That's SPY for you. So that's the range. I kind of, if you wanted to play like staying in the range, that would be the goalpost for today. It's possible we get out of it, but not extremely likely. QQQ. Bit different story we got cooking here. And this one definitely has some mega put levels. Look at this. Big tech is skewed with the puts, and we're unlikely to make these puts profitable for everybody. And there's almost nobody playing this week. A little bit of calls, that's a little bit of negative action, so we're probably just gonna hold it in here. Right around possibly like 610, 609. Let's see, we'll put that where the big level is. We'll put this where 609. The big level down at 600. Flip to the heat map. Yeah, we got a pretty nice bubble formed right there with some upside. Where's the big level? Big level's down here at the monthly, 590. It's only 300 million, not very big. And why don't I use this on individual stocks? Because I've just not seen one where it's very reliable on the heat map. So we got some up pressure to 618. We've got some down pressure to 605. 618, 605. And this is where I think, based on the levels, we might hang out for the close. And the 15-minute roadmap line just happens to be right there too. So that's what it looks like we're going to do. We could come down, visit this bigger level. It's possible. Keep it in mind, it's sitting out there. Now look at that. We just jumped it from out here in the monthly right over here to tomorrow. This is why I say, like, the amateur hour makes a big difference in this thing. But 605, I'd be surprised if we push through 605 today. We may get down there today and then push down further tomorrow, but this positive gamma, that's a different path that we might, if we get the bounce. There's less call players, so we could go higher. It's probably not going to happen before Friday, but we could probably just ease in here, and then if we're going higher, pop when there's no call players. So there you go. It's kind of the educated wild guess based on gamma, S&P levels. It's back to the 4-hour chart if we can push through. That's the resistance for ES, S&P 500. Otherwise, this retrace back down here does look somewhat likely. Could happen today, could happen tomorrow. Higher low, and then we go ripping through next week. Do still have the potential for chaos in March. It could pop up next week and then rip everybody into OPEX. Just really screw with everybody. We sucked in bears, could suck in bulls, and then end up somewhere down in here for OPEX. And then dip out and then rally. Be crazy. NASDAQ, same sort of situation. We got the 4-hour, but we're actually sitting on top of it. So big tech telling you we're tired of being on the downside. So resistance is right up here. As we mentioned yesterday, right at that 618, right at that prior high. We get through that level right around that 25.5 area. 25.5, probably going to have upward pressure up into the 26.5 area, maybe even 26.6. So this is an important level right in here, 25.5. We get through that, probably pushing higher. If we reject, get back below the 4-hour, back below 25,000. Might take a little deeper trip. That's kind of what I'm seeing there. That's price action, and that's options gamma. So a little bit different on each one. They stand alone. Cheese stands alone. Somewhere in between, we got the truth of what the market's actually going to do. So, like I said, I have no crystal ball, just a bag of unicorn dust, and I make guesses every day where I think price is going to end up. And so far, I've been right 95 days in a row. Push this up. Look at this all-time high, almost 76. Oh, there it is, $76,000. This is in the last year right here. I funded this account tax day last year. $77,000. 1 year profit. Beautiful. All-time 76. Past year $77,000. How much did I start with? Like $75,000. I put like. There was extra 10 went in, so 85, but I've taken some out, added some back. I mean, I don't know. It's going to be close to doubling my money. I do have some open stuff that I'm selling calls on. So the value is not 150, but it's, like 120-ish. That stuff is down a little bit. Like DJT is down a little bit, and Chipotle is down a little bit, and Docu's down a little bit. But keep selling calls and keep doing these NASDAQ beer money puts. Keep cranking out profit a little bit every day. Keeps the bill collectors at bay. Have a great day, everybody. I'll be live with Jack at 10:30. No, 11:30. 11:30. Hour from now. on Market Masters. Links in the description if you want to hang out with that. If you want to come see me tomorrow, make sure you're subscribed, hit the bell with notifications, and we'll see you tomorrow. Same bat time, same bat channel. Have a great day. Be safe out there. Come hang out in Discord if you're a member. And